Hey everyone, this is Dan with Theta Trend. Today is Tuesday, April 5th, 2016. It's about 2:40 p.m. or so here Mountain Time. The market's closed just a little bit ago. We're taking a look at a daily chart of the S&P 500 index, the SPX, and the market was down a little bit today. It was off 20 points to end the day down 1%, negative 1.01, and it ended here at 2045.17. And it is interesting to point out that this down day was a little bit more convincing than the one that we saw yesterday, but at the same time, we do have some shorter term support that we'll take a look at. This is the first close, or the first daily close, that we've had below the 10-day simple moving average. This is actually an exponential moving average, but it's pretty similar. I did double check for you. This is the first daily close that we've had below that 10-day simple moving average or exponential moving average since this move started back here in February. So really the market's been able to hold up and above this, and so today was the first day that we had a close, and what that means essentially is that the close that we had today on average was lower than the close of the past 10 days. So there is a little bit of what looks like a bit of sideways action in here. The market's not tanking lower or anything like that, but it does seem like it's starting to churn a little bit as it approaches these higher levels. And that's not to say that it can't continue higher in here, but for the time being, it is nice to see a little bit of a pullback and a bit of a pause just to give the position some time to work and give us a little bit of room to breathe. So let's drop down to the 65-minute time frame. So this is the 65-minute time frame. The 5-day simple moving average is the yellow line here, and the 10-day simple is this red line here. So we can see that we pretty definitively had a close below that level. And one of the things that's kind of interesting to point out, though, is that even though we had this little bit of a pullback in here, really we just kind of came down to rest on prior resistance that has been acting as support. We had this low back on Friday, and the market traded down sort of to this level, which was right around the 2045-ish area. And today, at the end of the day, we kind of undercut that and then pushed back up and above it. But we're still just sort of hanging out right around that 2045. What'll be interesting to see tomorrow is if this level, 2040, 2045, somewhere in there, if that holds, and then if the market is able to hold up and above this 2020 to 2025-ish area, that's sort of down here, the next level. For the time being, we still have a pattern of higher highs, but we don't have a lower low, and we're failing to make a higher high for the time being. But if the market gets back up and above this, say, 2055-ish area or so tomorrow, this was the level that we were keeping an eye on for yesterday, and we did see the market kind of rally up into there today and then fail and then turn lower. If we see the market get back up and above there, it could have the potential to push back higher and get back up even all the way up to this level here, which was from the December high, that was somewhere in the neighborhood of 2081. And that corresponds roughly to the upper expiration break even of the April 5 butterfly. And the lower side of that trade is also down here around the 2002-ish area or so, and that's this line right here. So let's hop over and take a look at a position. The position as the market closed today at 2045.17, the delta is negative 3.82, the gamma is negative 0.37. The theta on the trade's $44.88, the vega is negative 161.85, and there's an open profit of about $196 or so. If we had a big gap up in the morning, 1% gap higher, we'd be looking at an open profit on the trade of about $54, so we'd give some of that back. If we had a huge gap lower all the way down to 1983, we would definitely give some back and probably be taking a little bit of heat. And if that was to happen, we'd be looking just to exit the position at that point, because we are getting pretty close to expiration. The trade has 24 days to go, so my hope is that maybe we'll be able to sneak out of this position this week. It's going to kind of depend on the price action. If we get a lot of movement higher, then that may not be possible. If we sort of hang out in here in this 2040 to 2070, even up to 2080, which was that prior high, maybe we'll be able to sneak out of this trade this week. I'm not sure. We'll have to wait and see how it all plays out. But at any rate, that's all I have for tonight. The position looks pretty good. Everything is healthy. And the other trade, just as an aside, is pretty uneventful. There really hasn't been any change in that position either. If you have any questions, feel free to shoot me an email, info@thetatrend.com. And thanks for watching.